Welcome to Macro Mondays here on Landay's Crypto Corner. Today is December 16th, 2024, and we're looking at Bitcoin as always. We're going to follow up with where we left off on Friday of last week, where I did mention above the all-time high at $104,000 to pay very close attention to around 106 to 108, and then kind of take it $2,000 at a time, 108 to 110, 110 to 112. And then we're going to start making some jumps, probably 112 to 115, 115 to 120. And I'll show you why when we start looking at some of the higher term time frame Bollinger Band levels of interest. So those volatility levels of interest, we have seen Bitcoin now kick off more aggressive expansion to the upside here. We had the high come in just shy of $108,000, first hitting around, let's see, yesterday was 105 on the high, and that move was still kind of in progress in the lower term time frames. I'm sorry, yesterday. This was Sunday into Monday's candle, where Monday kind of spiked 106. Everybody got really excited. It dropped back down into the 104.5 region and then went right back up to tag that 107,857 level. So about 106 to 108, pretty close there when kind of estimating where things would fall. And part of what I was doing was kind of estimating where we would see this upper third standard deviation. So, well, Bitcoin can close above it, which it quite often does. You'll see that it typically acts as a little bit of resistance before really getting price moving through it in more extreme volatility. But in this case, this is expansion to the upside. It is confirmed by BBWP as well. Of course, we can see that it's confirmed on the bands by closing above the upper second standard deviation. And we want to see Bitcoin continuing to close above at minimum the upper first now to continue this expansive posture on the daily. And the upper first is currently coming in at 102,825 or so. So I would call it like $103,000 at least for today's candle. This will update and follow price as the basis band continues to rise and as the bands begin to spread out as they react to this increased volatility. So, we've been looking for this for a while. We've talked about closures above the upper second and how we needed it to close above that $104,000 level. We have seen that. That started on Sunday's candle with the close at 104,447. And then, of course, continuation on Monday. Will we see continuation on Wednesday? That remains to be seen. We would see more aggressive upside expansion if we see a closure above the upper second standard deviation, be it a green or red candle. We will see more aggressive expansion of the Bollinger Bands and price volatility. And that's currently coming in at $106,000 even. So that's going to be at least a medium-term time frame level to watch as we come into this now Tuesday candles close. Now, we do have some important events you can see down here that are occurring this week. First off, we have the Wednesday retail sales month over month. Then we're moving into the Thursday Federal Reserve press conference. So FOMC meetings, rate decision, all that kind of stuff. So the forecast is right now that they're going to cut by 25 basis points or 0.25%. That is, the market is feeling as though they're going to do that. That remains to be seen. I don't really speculate either way, nor do I really care. Eventually, I think even if they were to keep rates steady, while that would cause some volatility within the market, we can see that we're already in this nice upside posture. The last daily higher low on a closing basis and a swing basis right now, or on a closing basis and swing basis, I should say, is this close right here at 96,660. And then, of course, the swing low is coming in at that 94,220. And then we have another swing higher low right now at 99,220. So I wouldn't really be concerned about structure no matter what happens this week in terms of volatility to the upside and possibly even back down. When it comes to structure, as long as we're closing back above this swing higher low at 99,220, structure is fine. If we were to see that area lost, then I would look to the next close open here, this being the close open higher low at around that 96,660. And of course, that would pull in the two swings down here at around that 94,200 to 220 or so. If we saw that lost, then, well, look out, because we're probably headed down to test around 92 and below on any closures below the lower second and $92,000. We would see expansion down. Now, of course, there is, the 90,000 and 90,600, almost 700 here. That would, not be a great look for the bulls, but just want to let you know kind of like what I'm thinking about this structure in terms of where things are headed. And we can see that even if there was some volatility, there is quite a bit of room from where price is trading at this particular moment at $106,837, almost $107,000, and this last 99,220. But do understand, in a high volatility environment on higher term timeframes like the weekly that we're going to look at here in a moment, price can move in big ways. And when price does move in big ways to the downside for Bitcoin in an environment like this, we're likely going to see it take out the brunt of the bloodbath on alts. Believe it or not, that will be something to pay attention to if you have any alt plays that you are involved in or looking to get involved in, as it might present opportunity. You'll have to be the judge of that. I cannot be the judge of that for you. So you'll have to look at structure on the longer term to the shorter term to see if those are going to be worth it. And while this move is still going on, we have seen that alts haven't quite followed. Some alts have been down, and these were typically the early runners, like your Caspa, Solana, a little bit down, Stacks a little bit down as well. A quick reminder, Stacks ran with Bitcoin really hard back here. This is a little bit of a complex chart. It's not really that complex, but it was an early runner with Bitcoin into its original all-time high at 73,835 and really needed to cool down, and it has been doing so. Of course, we've got Magic Eden, which launched and has been kind of up and down a little bit here on the daily. This is the Gate.io chart, by the way, with its high all the way up there at $30. This was trading kind of speculatively based on like Whales market pricing over there on Gate.io. Prior to its actual release. So in this case, there are some alts that are keeping up and in some cases even slightly outperforming, like ETH BTC did slightly outperform for, a couple days and then back down. And now it's trying to find some sort of a low structure, but this is a downtrend officially with this lower low, lower high, lower low structure here. So be aware of that, but it is in a key zone. If it is going to start to dig itself out, one of the big things that I don't usually check on with you all here in the videos is Bitcoin dominance. We see that Bitcoin dominance had a big fall off all the way through November into December. And of course, alts were kind of catching up with Bitcoin. It has kind of bottomed out and then it's put itself in some higher low structure here. So playing back up to the highs at about just shy of 58% there. If it does start to crack back above it, even if Bitcoin is headed to the upside, or if Bitcoin is headed to the upside, we'll probably see the US dollar pairs keep up or rise, but not to the level of Bitcoin. So the Bitcoin pair is likely to lag behind. If Bitcoin is dumping off and dominance is going up, your alts are getting wrecked. So my alts too, I hold a lot of alts and meme coins. But in this case, Bitcoin looks good. Is this the next leg? Well, it's definitely higher highs. It's definitely expansion on the daily. It's definitely looking good. There are some things that towards the end of the month and end of the year that I will be kind of cautioning the bulls about here for things to pay attention to first quarter into second quarter of next year. Of course, there's that whole sell in May and walk away thing that does not always hold true. And I've shown that in video before. I think it's 9 were actually buys and 6 were sells. And the sells were primarily either entering a bear market or in a bear market. And in this case, we'll evaluate that towards the end of the year and kind of talk about that, have that discussion. But let's go ahead and check on a few other metrics. So this is our BBWP metric down here, 47/26. This is the charted format. You can get this under the indicators tab. Just type BBWP. You'll see it's by the caretaker. He was kind enough to let me use it in my indicator, which you can find for free in my bit.ly link, in my X profile, or in the video link description down below if you're watching this on YouTube. But this is confirmed expansion on the daily, and this has begun to show itself on the 2-day. And I don't often show the 2-day because it's not really as relevant, but we had the big expansion to kind of a contraction into a range on the 2-day here. And the 2-day is looking for confirmation of expansion on any closure today. We would start to see this moving average and the volatility metric tick up at the same time on this closure if we see, Bitcoin closing anywhere above its upper first. But realistically, we want to see it closing above its upper second to really kick off that next big expansive phase. Right now, because this is coming into a contraction, I would be aware of the area overhead. This is like 108.5 or so, 108.430 right now. If Bitcoin pushes up to it, could it be around like 109? Sure. In this case, again, that's why I was saying above the 104 region, this high over here. Take it $2,000 at a time. 104 to 106, 106 to 108, 104 to 106, 106 to 108, 108 to 110, and then 110 to 112. And of course, that's going to be based on some fibs. And then, above there, I'd be looking basically like kind of 112 to 115, where this upper third is starting to come in. We can get wicks through these bands as they're just volatility levels of interest, but this is about $115,000 at 114,800 or so as Bitcoin heads up to it. If Bitcoin does trade above the upper second, that's likely going to be about 115 or even above $115,000. So closes above by end of today's candle, which will close the 2-day candle as well, above 108, 400 to 500 or so. That is going to really start to confirm a re-expansion on the 2-day. So that is something to pay attention to. Of course, we are in critical levels for a regular Stoke, but it can hang out in the critical area or overbought zone for Stoke here for quite a while. 755 rather is going to be the number to close above for this 2-day candle to keep momentum pointed to the upside. Let's look at the daily. We had our little trend line regression, tried to bounce, came down to basically the next trend line regression here for a regular Stoke. Closes above 103, 122. We'll keep this pointed to the upside here. Looks good. So we have, a few confluences here. There is something to be aware of here on the daily, and that is wherever Bitcoin does put in a high, very highly likely going to throw another bearish divergence here. So, it's just kind of re-entering the bullish control zone. Off of the big low side structure there at 92. And in this case, it's the only way to avoid it is come all the way up to an 85 read. Now, an 85 read would put Bitcoin at around 118 to likely, as this updates day over day, likely around $120,000. That would be the bull critical zone. And actually, no, I'm lying. The bull critical zone is the 80 read here, and it would still throw bearish divergence even there. It would be the user alert level right here at 129, almost $130,000. Hey, you've heard that from me before. That's a major bear market fib extension from the prior cycle, $69,000 to $15,500. So if it closed up there, like at about $130,000 on the daily, without putting in a high before then it could avoid this in-trend bearish divergence that's going to likely continue to build. But, I'm not too concerned about it. We'll kind of cross that bridge when we start to see a high put in on the dailies. It's higher high structure, lower highs on RSI, bearish divergence. Likely, as long as it's in uptrending structures, just corrections. The more volatile price gets to the upside, the bigger those corrections get to the downside while still remaining in trend. So understand that. And there's nothing to be concerned about till we see longer term time frame structure change. Let's go ahead to the weekly here. Weekly's upper second standard deviation is 109,500. If Bitcoin continues to push it, we're looking at about $110,000. So something to watch to the upside. That is the upper second standard deviation. We're still in full on expansion on the weekly here, 84 over 82, but it is getting tight. That does mean that, Bitcoin can play back down to the upper first, for instance, which is at $92,000. Doesn't change much for expansion, but we would see the bands start to really outrun price. And then wherever they outrun price to becomes areas of interest as resistance overhead. And that is something to pay attention to when that does occur. But right now it can, it can ride the upper first and in between the upper first and upper second all the way up to Valhalla. And in this case, if we do see closes back above 109,500, again, that's in our 108 to 110 region of as an area of interest. And from the Fibonacci levels, I've mentioned this from the more local pull here, we've got 108, 882. So above the 105, we had the 104 to the 105 level there, the 272. We've got the next big one on the weekly is going to be that, like I said, take it $2,000 at a time. Is this correct? This isn't correct, is it? Bitcoin on the Coinbase chart. This is the low at 49. Why does this look goofy to me? It does look a little goofy to me. Yeah, something doesn't seem right with this. Am I on log scale? No, I'm not. There we go. Log scale fib, need log scale price here for this. So in this case, the next big area of interest, we had the 106 to 108, and in between the 1888 extension here and the 2 spot, like I said, that's where I'm getting the ticket like $2,000 at a time based on some of the volatility levels of interest, but also where the fibs are. So 6 to 8, 8 to 10, 10 to 12, where the 2 spot or the 200% Fibonacci level is, based off of the pull from this consolidation structure down here, is kind of right around where the upper second is. So that would be an area of interest to pay attention to. Of course, we see the upper third off of a more local fib like that, kind of coming in above the 272 and in between that and the 2414, which is 124,224 and 131,652. So basically $125,000 to like 130 to 132. I would use rough estimates with that. And this is going to kind of line up with right around where we have our bear market fib pull. Let's go ahead and just get the monthly up here. By the way, the monthly is at $121,000 now. So again, above 112, I'd be looking to about 115, above there around 120 by the monthly upper third. If it does start to push in there, then we have, of course, the bear market fib pull from this area at the 1414 at $128,000. So we do have some areas of interest, and now the upper third kind of on the weekly kind of lining up with that. And to be quite honest, above the macro level, which you see on the weekly, we closed above the 1272 from the bear market fib extension at 103,645, where we did see Bitcoin, kind of tag in the prior weekly and then hang out under. Now it closed above. In the more macro sense, I'd want to see a monthly close above the 1272 by the end of the month. That would look really good to really start targeting this 1414 at 128 to, I would say, $130,000. So that kind of fits in with what we talked about on the daily. If the daily continues up in like a parabolic fashion and does not have a high put in on a closing basis, because RSI measures closes, not your wicks or swings, then that's where, it could potentially get into the critical area and avoid bearish divergence. But, it's statistically more likely that it's going to throw bearish divergence, obviously anywhere below about $130,000. That would be right around a major level currently on the weekly where the upper third is. That doesn't mean it's going to stay there. It's likely going to expand past this area to about 130, maybe even above. No matter what, even if Bitcoin pulls back, we'll see that residual expansion. But understand that the daily needs to get there to avoid in-trend bearish divergence. But that's the next major Fibonacci level to overcome on some of these longer term timeframes, or get to as a target on some of these longer term time frames, even if we see pullbacks on the daily. So as long as it's closing above the 1272 at 103, 645 or 650 or so, depending on your chart, then we're looking to the 1414 extension at 128. And I would still give it some room to 130, just like when we were calling it back here, kind of calling it around, 103 to 105, basically. For the more macro, and we hit 104. It'd be the same for the 1414, like somewhere around 128 to 130. And then, of course, if we were to see, now that we're looking a little bit further down the road here, but we can see that above there is the 1.618, and this just so happens to be where the prior bull market topped out, was at the prior cycle before that, the 2017 to 2018 fib extension from that particular bear market. We saw the bull market top out in 2021 around the 1.618. Well, for this cycle, it is at 170 through almost $174,000. So is 175 possible? Yeah, if we start seeing closes above about 128 to $130,000 on longer term time frames. Specifically, I like to see monthlies above there, but weeklies start to look good as they bleed into the 2 week, 3 week, 4 week, and monthly. So we'll see how December closes coming into January. But I've mentioned this before, and let's just talk about the weekly for a second. I want to see closes above 92. That maintains this expansion to the upside. That wouldn't look good for BBWP, but whatever. I'll accept it. Trend is fine. The last higher low is all the way back here at 58,863. So there's actually a few things of interest around there, but realistically, it's this monthly that is intriguing to me, because we're going into a re-expansive posture, 38 over 37. It's not quite there yet for re-expansion when we already saw compression to expansion. So let's go ahead and get the fib levels off here. And let's talk about this just real quick. We're going to touch on this more towards the end of the month, but we saw, and you can always tell by the lower bands on longer term timeframes with this, we saw a compression. So we saw our first ever bear market expansion. And I've walked you through that history before, but we also saw a compression to expansion already, and then a nice higher low structure on the monthly. And then we're going for re-expansion as of last month's close above the upper second on the monthly. And of course, we need to see closes continue above 98,850, almost $99,000 by the end of the month to continue that expansive posture to the upside. But because the bands were already kind of expanded and only just began to contract while Bitcoin was above the basis here, we didn't see a really tight compression. I'm not looking for the real actual run to begin until it's above the upper third, currently out of that, $121,000 or so. Now, that does mean that area overhead can at minimum act as shorter term time frame resistance when Bitcoin gets there, wherever that upper third is. So just understand that. I wouldn't be calling for bear markets or anything if it tapped it and pulled away or pulled back or lost the upper second. We need to see structure. We're in higher low structure, full trend at this point on the monthly in an expansive posture. So you can't fight what you're seeing right in front of you. But we'll talk about this more coming into the end of the year, and something that we'll be watching first quarter of next year. It would be nice to see, maybe December just climb right up there above $122,000 and close above it and kick off the true expansive posture. Yeah, we're in a bull run, but that's the true expansion. That's what I want to see, and not see that area end up as overhead resistance. So that is something that I'll kind of seed in your minds for right now, as we do need to understand both sides, not just the bullish case, but also, some of what could become a bearish case. Now, I want you to see that Bitcoin continuing to come off of exchanges. This is the exchange reserve chart, and this is very telling. This thing is dropping like a rock. Every single pullback in the lower term time frames, just Bitcoin is flying off centralized exchanges and derivative exchanges. So that's good to see. And again, we'll talk more about this in towards the end of the month. But this is the character change that we saw back why is this not actually, there we go. The character change that we saw back in 2020 heading into 2021, is now not, it's not just this was the telling thing. This was a downtrend that broke macro structure in terms of, in terms of exchange flows. We saw it, short-term uptrend, downtrend again, lower highs, lower highs, lower lows, lower highs, lower lows. So obviously demand since the 2020 crash, we'll call it, has been high and has remained high. And those who think that those bigger players have been out of the game at any point, well, they've been sorely mistaken. Now, hide if you're in the dark, this next chart's going to be white and it's going to be very, very bright. I cannot change it to dark mode. So your warning is now. We're going to switch over to the Caprioli chart. I want to show you some confluence here for the electrical cost for miners. And 3, 2, 1. There we go. All right, $58,026 is the estimated electrical cost. And, this is within the margin of error. And this is basically the lowest cost. This is just purely electrical cost to produce Bitcoin. And this is within the margin of error of what we're seeing for internal metrics for miners. Some have better PPA agreements or power plan agreements, PPAs, than others, but this is roughly right around accurate. It's within the margin of error for electrical cost. This is basically the lowest cost to produce Bitcoin in Bitcoin terms. So $58,026. That just so happens to be that just so happens to be the last weekly higher low area. It's crawling up to that area in the last weekly higher low, right around this higher low at 58,863. So there is a bit of confluence there. It's good to see that back up, and typically will act as a nice floor on any kind of a crash scenario. Of course, from here, that would be massive, and I'm not looking for that. I just wanted to let you know where it was, but looks good. If we do see corrections, I'm looking for higher lows on this weekly. So that's going to be it for me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.